Welcome to my channel. Today's topic is about the preparation of cash flow statement. Cash flow statement provides information about the changes in the position of cash and cash equivalents of an enterprise over an accounting period. The activities contributing to this change are classified into operating, investing, and financing. The methodology of working out the net cash flows from all these three activities for an accounting period has been explained in the earlier classes. However, while preparing a cash flow statement, full details of inflows and outflows are given under these heads, including the net cash flows. The aggregate of the net cash flows is worked out and is shown as a net increase or decrease in cash and cash equivalents, to which the amount of cash equivalents at the beginning is added, and thus the amount of cash and cash equivalents at the end is arrived at. Another point that needs to be noted is that when cash flows from operating activities are worked out by an indirect method and shown as such in the cash flow statement, the statement itself is termed as the indirect method cash flow statement. Similarly, if the cash flows from operating activities are worked under the direct method while preparing the cash flow statement, it will be termed as direct method while preparing the statement. However, unless it is specified clearly as to which method is used, the cash flow statement may preferably be prepared by an indirect method, and is done by most of the companies in practice. Now, we can move on to a problem. Here is the problem. A balance sheet of Xerox Limited is given. We have to prepare the cash flow statement. Some notes to accounts is made, and some additional information is also given. So, before proceeding on to the preparation of the cash flow statement, we have to find out some amounts by preparing accounts relating to this, and some amounts by making some calculations. First of all, we will proceed with the preparation of equity share capital account. We have to write a heading working note and then write the equity share capital account. So we are preparing an account, so its format is particulars debit, particulars credit. Journal folio in between, then that shows the number of the journal. So let's look into the amount of the equity share capital in the question. Here it is. The previous year, it is the equity share capital is 10 lakh, and this year it is 15 lakh. Now move on to the preparation of the equity share capital. So as it is a liability has credit balance, so balance brought down 10 lakh, then balance carried down, that is the closing figure 15 lakh. The 15 lakh minus 10 lakh, it is a new capital raised. It should be written as cash. So 15,000 minus 10 lakh will be 5 lakh. That is the new capital or additional capital brought. Then we can move on to the preparation of debenture account. Same format is made. Let's look into the amount of the debenture in the QST. Debenture, we can look into here. The note to accounts is made. The previous the 2016 debenture amount is given 2 lakh, that is to be returned. So balance brought on, it's also a credit liability figure. So balance brought on 2 lakh, it is written as 20,000 strong, it is 2 lakh. Then the redemption is made as per the question. So it is to be written in the debit side as cash bracket redemption, same amount. Then move on to the preparation of bank account. The balance, the amount in the bank we can look into. Here it is the amount previous year balance and this year's balance. Note, the bank balance, it's not to be taken, but only this amount bank loan that is to be taken for preparing the bank account to be shown from the for preparing the cash flow statement. So that is 1 lakh. So it's written as cash 1 lakh and closing figure it's also 1 lakh, no, nothing to be shown here. Then provision for taxation account. Move on to the question. Here it is given in the previous year balance, it is 80,000. This year it is 95,000. Also some adjustment is given. That is income tax paid during the year 15,000 on account of dividend tax in the additional information. So balance brought down 80,000, closing balance 95,000. So in the debit side, cash, it includes tax paid. In bracket we have to show the tax paid, which includes the 15,000 as dividend. Amount is 80,000. Then land and building account. The previous year balance is 8 lakh and this year is 6 lakhs 50,000. In the additional information, it is written as land and building book value of 1,50,000 was sold at a profit of 10 lakh at 10%. So the profit is 1,50,000 into 10 by 100, that is 15,000. That is the profit on sale of the land and building. Moving on to the account, profit should be shown the debit side. Statement of profit and loss, profit on sale, that is 15,000. Then debit side minus credit side will be the cash. That should be shown as cash, that is 1,65,000. Then moving on to the next account, that is the proposed dividend. Proposed dividend, it is given the question, that's cash, nothing to be written here. No other extra items, there is cash here 1,50,000 and surplus. It's a cash surplus 1,50,000. Then plant and machinery account, opening previous year balance 4 lakh, closing balance 3,60,000. So there will be depreciation, that is 40,000. That is 4 lakh minus 3,60,000. Then no accounts to be made. Then moving on to some calculations before proceeding on to the preparation of cash flow statements. First, we have to calculate the income tax paid for operating activities. Before that, we have to write the total tax paid during the year, that is 80,000, and dividend distribution tax, that is given the additional information 15,000. So by reducing this, we get the amount 65,000, that is the income tax paid for operating activities. Then net profit earned during the year after tax and dividend, that is given the question. This year's profit is 7,50,000 minus 6 lakhs. That will be the net profit earned during the year after tax and dividend, that is 1,50,000. Now we have to calculate the net profit before tax. It is calculated by adding net profit earned during the year after tax and dividend plus provision for tax made plus declared dividend. That is net profit earned during the year after tax and dividend we have already calculated, that is 1,50,000 plus 95,000, that is the provision for taxation, the closing figure. Then declared dividend, that is given in the question, that is 1,50,000. The amount is 3,95,000. Now we can move on to the preparation of cash flow statement. The format is particulars and the amount. It's a statement. So first of all, we calculate the cash flows from operating activities. Net profit before taxation and extraordinary items that we have calculated now, 3,95,000. Then we have adjustments for depreciation, that is 40,000. Then goodwill written off. In the question, here it is given the goodwill. Goodwill written off means the previous year minus this year, that is 20,000. Then profit on sale of land will be reduced. The final figure will be the operating profit before working capital changes. Then decrease in trade payables. Moving on to the question, trade payables, previous year balance 1,10,000 minus 1 lakh. That is the decrease. Decrease in trade payables, that is 10,000. Then increase in trade receivables, like we calculated the decrease in trade payables, we have to calculate the trade receivables also by comparing the 2 years balances. Then there is an increase in inventories. These all things we have to reduce. So the resulting amount will be the cash generated from operations. Then we have to reduce the income tax paid, that is already calculated 65,000. The resulting amount will be the cash flows from operations, that is 2,35,000. Then we have to calculate the cash flows from investing activities. First item is the proceeds from the sale of land and building, that is 1,65,000. Then purchase of investment. Moving on to the question. The question it is written, that is non-current investment. An investment is made, so that is to be reduced 6 lakhs for arriving at the cash used in investing activities. Then cash flows from financing activities, proceeds from the issue of share capital. Then redemption of debentures, we have already got the all figures. Proceeds from raising bank loan, then dividend paid, dividend distribution, tax paid. By adding all those amounts, we get the cash flows from financing activities. Then net increase in cash and cash equivalents, that is comparison between the 2 years balances of cash and cash equivalents in the balance sheet, that will be the 35,000 amount. Then cash and cash equivalents at the beginning, 3,40,000. So by adding these two items, the resulting amount will be the cash and cash equivalents at the end. That's all for today. Thank you.